Hello and welcome to another financial analysis video. Today I'm talking about Procter & Gamble, who reported earnings and beat earnings expectations, reported 98 cents a share versus 95 cents a share, and that 98 cents is down from $1.07 of the same quarter a year ago. So Procter & Gamble is seeing some earnings pressure, and they've been fairly transparent with us in terms of seeing some earnings pressure. They are obviously a major global player in the consumer goods market. One of the things I found interesting is, they have a decently growing return on equity, but it is a bit of a misnomer because you could tell on this chart that equity has actually declined. So the returns aren't as impressive, I guess, but you see the same pattern here. Procter & Gamble has consolidated their their assets. So the business, I don't want to say it's shrinking, but they're working on more profitable areas of the business. So these returns are actually, in my opinion, a positive thing. And when conditions get better for them, they're definitely going to see the benefits of this. You could see that they have struggled. This is quarter-to-quarter movement of trailing 12-month earnings, and they have struggled to maintain earnings growth. Revenue growth really sank in the first quarter on a trailing 12-month basis. One of the things I found interesting, and I'd have to look into it in more detail, but they had a good asset turnover ratio really going into last quarter, but usually when this tanks, revenue tanks, and we could see that happen in the current quarter, but revenue was actually declining for a couple of quarters despite the increased asset turnover. My guess is it's because they have gotten rid of some of their less performing assets, and as a result, they're seeing better turnover. I mean, that would be my guess, but this drop, corresponding with the drop in revenue, really concerns me. And if we look at the operating performance, and I want to make sure I have those numbers. I do have those numbers. You see here, trailing 12-month revenue really dropping. Cash flow, though, operating cash flow and free cash flow remain pretty strong. So that's a good thing. And, at 3.5% or 3.5% dividend yield, this is a decent dividend company. And 2/3 of their earnings right now are going into the payouts. So there's strength there in terms of dividend sustainability. We're seeing about $8 billion in a dividend commitment versus $11 billion in trailing 12-month free cash flow. So the ability to pay the dividends is good there. Where I'm cautious on this is the global aspect. I believe that we're going to, in the near term, see a dollar that's strengthening against global currencies, and that's going to make Procter & Gamble have a more difficult time exporting products. So on the global side of the business, they're going to struggle a little bit. And on the domestic side, they're going to do well in the United States, but I think the global side is going to offset more strongly than the domestic side. So I'm concerned about them in the next 2 or 3 quarters. However, if we were to go into a recession, their defensive stance as a stock is still relevant. So it's not like I'm throwing their defensive stance out of it necessarily. And at times like this, when the market is going through a bit of a euphoria, it may be good to have something like this if you're a long-term investor. However, like I said, at this time, I think the global pressures are going to really weigh on them for a little while. I hope you enjoyed this video, and happy investing.